So in this video, I wanna go through small time frames like day trading and stuff, like strategies for like to day trade and to intraday trading and stuff like that. Just basically 15-minute time frames or anything below like hour 4, 1 hour 30. Any of these I would class as a day trade. Alright, so basically, for when I day trade, like I do day trade like every day nearly, but obviously I still find the swing trading a lot more reliable, like the hour 4 daily one. Like here, you can just if you look at the hour 4, you can see the whole market. Whereas like 15 minutes, you can literally just see, you can't really see much. So if you want to day trade, you should always look at like hour 4 first, just to see where like see a few movements or see what you can see in the market, and then drop down a bit. So we know that so far the market's in like a bit of a downtrend, uptrend. So for now, we could say as it's in an uptrend, it could carry on going up. So it depends. So anyway, what I would do in the day trade, I look for this pattern mainly. This, let me show you. Okay, so look, if you look carefully, look, there's 1, 2, so there's twice. Remember, trend lines, at least, oh sorry, there's 3 here, even better. That's more of a chance that this level is even more powerful, because the more that touches the line and respect it like this and bounce back off it, means the stronger the resistance, or if it was their support. Right, so that's 1, 2, 3 levels bounce from there, and then we will draw from here. Right, now what pattern is this? That's a triangle. See, like 1, 2, 3, 4. Failed to touch, but it broke. Alright, so now where would you take your profit? That's the question. I would take it here. Remember, resistance turns into support. So for me, that looks like the closest support. So I would be taking profit from around here, because look, you can see there's a triangle and triangle here. None of them broke out apart from the wicks, but remember, I don't look at the wicks, I look at the price. Forget about the wicks. Like if you look here, like look, see, none of it broke. This is a pure price, this is just price. But anyway, I don't use them. I mean, I just here's the powerful price here, which broke here. It didn't hold anymore. So that's, look, if you notice, it all, remember, when a support gets broken, it will always break a bit, well, retrace back up. So what I do is, to know where to put my stop loss, I actually use this. The ATR is called the average true range. It is, if you go on to here, look, oscillators, average true range. This is one of the most powerful tools in the market, okay? Alright, it's a bit complicated, so what I advise you, go to Google, download ATR in pips. It's called ATR in pips. You can download it from Google, and then make sure the file says MT4. And when you've done it, press file at the top left, open data folder, oh sorry about this, and then click MQL4 and then drag it into indicators. Alright, that's just some advice. So yeah, download the ATR in pips and make sure you set it at 14, because some of them say 20 or whatever. Alright, so look, I'll get into more about ATR in another video, but alright, so here we go. Yeah, look, this says 1.8 to the right. If you look here, it says around 1.818. So this means that basically its volume is measured before, like, I can't really explain in this video because there's quite a lot to say, but it's called, this means the average true range. So it's kind of saying how much the price has moved in the 14 days before. Look, so 14, right? This is 14 average true range. So here you look here, yeah. 14 days ago it moved around there. So it moved around 66 pips, okay, or 6 pips actually, because this is a small time frame. This is why it gets confusing. Here you gotta download the indicator and it'll tell you right at the top how many pips. But anyway, right, so let's look at this. Okay, look, if you look on the right, it's 18 and we are here. So look, basically when you place your stop loss with the ATR, you want to do it 3 times of what the ATR says. So if it's 18, this is around 18 here, then another 18 and another. So your stop loss will be 3 times the ATR, and your take profit will be similar to the ATR, if you kind of get what I mean. Look, so your take profit will be around here. So this is like a day trade. This is small, small little simple trade. But let me get you another one to show you. But I don't always day trade. Like a lot of my professional trader friends and stuff, you know, we all we use like 4-hour time frames. It's more reliable. These sort of time frames you can't really see the whole day. But look for the triangle pattern. Let me give you more examples. Okay, remember this is what a triangle pattern looks like. So at least 1, 2 to the top, and then 1, 2. Okay, look at that. 1, boom, broke here. You know, you want to aim. This is important to know how many pips to take. 27, which would have been here 270. You can't really get around here, so look, you would have done a quick scope. But as I'm on a 30-minute, I would have gone to the 5-minute to get me. See, look, it would have been all the way down here. So always drop down if you want to scope. This is probably the most accurate scoping method there is. Like, I'm not a proper scoper because, you know, I risk a lot of money, and like I said, scoping isn't the most accurate. And traders, professional traders, want the highest probability setup, which is like hour 4 time frames, because, you know, they act a lot stronger than just a simple little trade. Alright, but anyway, here's another triangle. See, look, it's simple to draw triangles. You get used to it. So at least 1, 2, 1, 2. Breakout, boom. So you could have sold here, just took a bit of profit. If you use like £1 a lot, this could have been like £1,000 right here. So it depends how you how much money you want to risk and how much. But this is just like some patterns for day trading. Okay, this isn't. I'm gonna get more into detail with like the take profit and the stop loss, because this right here, the ATR, is the best thing for me to find out where I want to put my stop losses and stuff. And it's a really powerful tool. Oh, sorry about that. Yeah, alright, let me just get into another example. It's not just triangles, but mainly triangles. Look, here's another. I don't know if we've done this. And also use a parabolic to find patterns. Look, this is a set end. Look, click on parabolic SAR in the indicator section. Copy that. It's really good to find patterns, okay? Alright, so look, here you can see 1, 2, 3, 4, 5. Look. Here's a pattern in the making. You see, or I still would have done that, but you can see that it hasn't actually broken. See there, look, this is another triangle here. If it breaks here, then take profit. Like I said, look for the ATR or the nearest support level. But yeah, 1, 2, 3, 4. See, look, 2, 2, or 1, 2, 3, even more powerful. Like I said, the more trend lines that are touching price, the more powerful. Always. This works on any pair, but when you day trade, I advise you to look at these pairs. This, Euro USD, USD JPY, USD CHF, Great British Pound USD, USD CAD, AUD USD, them sort of pairs. They're more cheaper to buy, because remember you don't want to be spending a lot on forex, because they can hit your stop loss quicker when they're more expensive, because you can't put your stop loss too high, because it's expensive, some of these pairs. Alright, I see. This is wait, let me just see if it's broken. It looks to me like it just got broke, because the price broke through. If it closes under here, then it's definitely a sell. And like I said, I'll look for my ATR. So for example, look, this is just a trend line. This is not even a triangle. This is, look, let me give you an example. This is like more of a channel. 1, 2, 3, 4, 5, broke, 6, ATR, 160. Like the thing is, yeah, with the ATR, even myself, I use an indicator, but it's on my other platform. But to know how many pips to take profit, you need to download the indicator, because even professionals don't even know, like, because this could mean 160, 16. It's very complicated, so you need to download the ATR and pips. So make sure you download that. Once you have it, it'll tell you exactly how many pips the market could move, or where you want to put your stop loss. So yeah, basically what it is, so for example, if this is 160 pips, you'll put your stop loss 2 times below. So if it's at 160, you'll put your stop loss 160 pips, another 160 pips, but your take profit will be 3 times bigger all the time. Now think of that as the best money management you could think of, because you'll always be in profit, because your loss is small, your take profit is bigger. But remember, I'm going to cover more about the ATR in my next videos, but this is a really important tool. And remember, trend lines or triangles, 1, 2, as long as it touches twice, 1, 2, 3. The more touching, the more powerful. Like here, it's 4 times, 2 times, well 3 kind of, but I broke. But anyway, yeah, I'm going to get into more detail on the ATR and that in other videos. I hope it helped. Yeah, I want to just go about like indicators and stuff, and why they don't work like people think. Alright, also basically, like in this video, if you notice, like, look at the Shimoku, look how messy it looks. And let me give you an example. Yeah, people would use this indicator. This is what it's called. If in case you don't know the name, it's somewhere in your indicator file. But anyway, people use this literally on a regular basis, and this is how they use it. Okay, so look, they look for breakouts and they sell it. But for example, they don't always work. Like here, look, you can see it broke out, but it didn't drop, because these are indicators. They don't know the market completely, and I'm just giving you a bit of a heads up. Don't rely on indicators. Don't make your charts so messy like this too. But anyway, let me just close this anyway. I personally would advise you to trade without any indicators, maybe a moving average just to get directions, which I use for sometimes, But anyway, like this is an important thing that you need to know. Okay, right, so banks and these massive traders, yeah, this is 95% of why traders fail. Remember, 95% of traders fail in the market. This is a reason why. Okay, so for example, yeah, traders, like professional traders, yeah, they will, for example, imagine we're here now, okay, we're right here. The market's dropping. You know what banks and the hedge funds and big professionals, they'll have a buy order right here. They will wait for the market to hit this level. It's basically saying they predicted what's going to happen, and they know that the market's about to shoot up. And this is what I'm trying to say. Which indicator would tell you this? Alright, so this is an example. Okay, this is how I do. This is my strategy too, even more. Okay, let me give you more of an example. Okay, all right. Where's that? I use this is an indicator. Look, if you want to download it, this is like, look, go on Google and find it. This is a good, I wouldn't really call it as an indicator, like telling me what to do. It's parabolic SARs. Literally all it is parabolic SAR. The reason I use it is so I can figure out support and resistance levels. Parabolic SARs are good because, let me just give you a quick example. Right, here's a parabolic SAR indicator that you can see. Look, they show reversals, and remember, support and resistance is drawn by reversals. Okay, but let me close it. I don't need that now. But anyway, parabolic SARs are all done by reversals, right? And they represent support and resistance. Alright, so look, if you was in this trade today, right, I'm still in it right now anyway, on my real account. So basically, yeah, if you notice, it held here, the support levels, these are all support levels, okay? Then it broke this level, which was here, because remember I said support equals future resistance. Resistance equals future support. So look, it broke but it didn't touch the next support resistance level. Whenever that happens, this is a key to trading. This is what banks look for. Bankers or pros, they will know exactly what they would not buy it. They would wait for it to drop around this level. And many of you ask, how do I know that it's going to drop here? Alright, so let's get some factors and let's because this is what I'm saying. This is my strategy. Remember, it breaks at level, and then it should originally touch here, but it didn't yet. But eventually it will. So that's me basically predicting the market is definitely going to hit there. But when is it going to stop going down and back upwards? That's what you're probably thinking too. Look, this is what I do. Okay, so alright. Normally I draw my Fibonacci low to high, which you can see high low. So look, the low to the high. This is a really big candle, so but it still works the same. Alright, so here's a key level 38. Remember 618, 50, and 38.2. Write them down on your notepad or whatever. These three numbers, they all you look for. Also 76.4 and 78. They're the same number, just write 78.6. So remember, but with this strategy, these are the main three. Sometimes 78, but mainly these three. Alright, look, now that's just one key level. Okay, that's one key level that we got evidence that is a buy around here. Okay, let's take a look at this. Alright, look, so look, 1, 2, 3, 4. Wait, let's draw it correctly so it hits the price. 5. This is the 5th time. Look at that. Now, alright, so this is where the crazy money comes in. Literally, this is where the cash flows. I would buy right here. I would wait for it to touch here. Another reason, look, if you look back, here's support, resistance. Look how it touched this level. High probability chance that it's not going to break this anymore. So it retraced. Now I would have brought here, take profit all the way here with a stop loss of just this. Stop loss, take profit. See the difference? But anyway, if you're new to trading, yeah, I want to give you more. This is just more of my strategy. I'm gonna go completely into it eventually, but I'm still getting basics up and stuff. So anyway, let's just close this chart out. But I hope you, if you are more advanced, I hope you get this a bit. So remember, it retraces, okay? But anyway, let me just get back to something. All right. So remember, these are the main levels in Forex. Sorry, if you're completely new, remember, look, support and resistance. Okay, support is where the price drops, doesn't make it any past there, but it shoots back up. So that's the support level. So when you see a support level, you want to draw a line. So look, support, and then here again, look, it goes up, couldn't break past here, dropped again. So that's resistance. Look, I can do it myself now. I don't need to use that indicator. Look, see, look, it broke here, retraced, boom. See. But anyway, this is just support and resistance. I know I've covered it, but this is so important. Support and resistance is what makes you successful in Forex, 100%. So look, here, just looking at this chart, look, I'm being serious. We use parabolic SARs to find levels of support. Just look back a couple days and stuff, you'll find some good you'll find some good levels. Mainly on hour 4. I don't really use for intraday. I'd use hour 4. If you want to go weekly and stuff, that's more like a couple of days sort of trade. But if you want to close your trades in like a day, just leave it like that. So yeah, that's just support and resistance. Okay, this is mainly, this is half of my strategy video, half of my support and resistance like analysis. So let me just give you more examples. Look, my advice: open up a 4-hour chart, draw as many support levels as you can. Look, it's so simple. Look, Parabolic SAR does it for you. You just got to line it up. Can you see how this used to be resistance, now it's support? See, this is a high chance it could go up again because look, it broke up, retraced, boom. We're going to get more into ratio trading and all the technical, me personally, I don't use like complete ratio trading. I use more price action, which this is basically price action. This is more, support and resistance, and they call it naked trading as it is, which it is because I'm not using indicators really. I'm using this. I know it's to indicate, but I'm not relying on it. It's just helping me to draw some levels, which, because remember, support and resistance comes after reverses. Look, down, couldn't break, reverse, couldn't break, reverse, couldn't break, reverse. See, tried to go down more, didn't. Tried to go up more, didn't. So look, that's the support level, that's the resistance. Remember, support's always at the bottom, resistance always at the top. Now let me just show you one more thing, okay? Trend lines too. Don't forget trend lines. Trend lines are powerful. Okay, I got a new YouTube video up just on trend lines for basic stuff, not complete technical, but I'm gonna go more technical with trend lines too as well, so don't worry. Also, if you look here, look, 1, 2, it broke. See, look, it shot all the way back up. Trend lines will always act as support and resistance too, so but you don't want to rely on them completely. I still love my support and resistance more than anything, but like I said, remember when I said how when price, like this one, let me just show you, where is that pair? Alright, remember how I said, look, on this pair what I was just covering, it broke and it retraced. This is where trend lines come in. Okay, look, remember I said 1, 2, 3, 4, 5. See, perfect buy. That's what I'm saying. So you got to learn about trend lines too. But this is just a basic. Remember, there's lots more to come and stuff, but I'm just getting it in your head. Like, might be more about my strategy, but yeah, just remember, this is how to draw support and resistance levels. Look for where is the thingy? So all my charts look quite messy actually. I look for reversals. Okay, couldn't break, went up, couldn't break. Even a parabolic SAR is not shown here, but this is still support level, so you have to kind of figure it out yourself. But I still kind of use more parabolic because they're more powerful than just your own knowledge. I'm not gonna lie, parabolic SARs do represent powerful levels of support, which is hard to figure out with yourself. This is where traders also mess up when they just can't find levels of support and resistance. So yeah, this is just basic video and stuff, but I'm gonna cover more about candlestick patterns, the ATR thing, this thing. Look, where is it? The thing I was talking about earlier for this one, average true range. This is powerful. Okay, remember that. This is for where you want to put your stop loss, because many traders fail in that, and this is literally 80% accurate with stop loss and take profit. And gonna cover trend lines, directions of the market, how to figure out where the market's dropping, going, blah blah. And yeah, so this is just the beginning. Literally still got lots to go through, but yeah, I hope it helps. In this video, obviously it's simple, but listen, basically what it is, a lot of traders get this wrong. Basically, for example, this is like, let me give you an example. Okay, look, so you see with 0.01, that's basically saying you've got 1 penny. In England, like, penny is, that's nothing. But in the forex world, yeah, you're using leverage. Like, it's kind of hard to explain, but if you know, like with leverage and stuff, you eventually just don't need to know about it. It's just the first time that, obviously, if you're new in that, you have to kind of know what leverage is. But now, like, I don't care. That's it. I've got my account. You know, basically, what leverage is like, you're basically getting a loan from the brokers. Like, for example, 10 years ago, the brokers, you have to start off with £50 million or $50 million back in the days, like with banks and stuff. Now, they introduce leverage in it to the brokers. So now, leverage is basically giving you a loan of free money. Like, for example, 1 penny with a leverage of 500, because that's the most highest leverage, and that's what I use. So 1 penny is literally saying that you've got £1,000. So the reason why they use leverage here, because these prices are expensive. Like, for example, what's 1 penny gonna do? If, like, this is how forex works. Look, so for example, you see here 5.5. I want to buy it because I know that the price is gonna be more high in the future. So you're making literally like 5p, because remember, a pip is like a penny. In fact, a pip's lower than a penny. A pip is like the last number of a penny, because you know, like like, for example, the price for example, if it was a pound, that would be 1.32, £1.32. But in the forex world, you got the last 3 digits, which are useless in like everyday money, you know, because we just call it 132. But in the forex world, that's like what pip is, the last thing. But obviously, with small money like £100 or 1 penny, it's not doing anything. But leverage is making it powerful. Leverage is basically saying that in the forex world, you're rich, but it can also be risky, because a loss can mean that you're losing bare money too. So it depends. But anyway, that's just leverage, and that's lot size. So for example, if my advice here, I think you should write this down. So if you got $100 account, £100 account, yeah, you want to at least nowhere above this 0.05. This is like 5p. And for example, look, 0.50, this is 50p, yeah, but you probably would make about 400 or 500 with these sort of lot sizes. But these are risky. You don't want to do that until you've got at least £2,000-3,000 in your account. If you got 500, I would recommend personally 0.10. That's like 10p. But in the leverage world, you're using like 10 grand. You know, so you're basically got £10,000, which is 10p. That's why when you buy with 0.10, you're gonna at least get like £80 or £60. You know, so that's still quite a lot of money. And yeah. Anyway, that's just lot size, and that's you know, you need to kind of understand that. I know it's kind of complicated, but it gets simple. Eventually, you just don't need to use it. So, for example, let me give another example. Like here, 10. That is a lot of money. That's basically saying this is £1 million in like the forex world, kind of. You know, because a pound is like 100 grand. So think of it like that. £1 is 100 grand in the forex world, and that's a lot of money. So I wouldn't go above like 0.50, but that's still a lot too. For if you got a £500 account, just literally stick to like 5, or even for the beginning 0.03, because that's like £3,000 in the forex world. So kind of, you know, it's complicated, but yeah, that's how it works. Like 0.1 is like 1,000. You know, it gets kind of easy after. But you'll see, as you like start buying with like these sort of lots, you'll notice how much profit there is and how much. Let me give you an example. Look, so look, this is 0.03. Yeah, let's see how much profit. So look, 62 pips. Remember, this is only 62 pips. Many people say this is 609 and stuff, but that's actually 60. That's 60 because you only look at the first two numbers. So look, with 3p, you're making £18. You see that? Or dollars or whatever. This is a demo account anyway. But look, same here. Like you're making, you know, £20, £12. So let me show you this now. Look, this is a 10. Look at this. This is nearly £1 million in the forex world. Yeah, you're making about. Only 600. Let's do what we done before, the 60 pip thing, 600 or whatever. Look how much profit that is. That's like £8,000 with only a little drop. Imagine that dropped here. You're making like 8 grand in just one trade. See, and like the pros, yeah, the big banks, they'll use this. They'll use they'll use this like 50. So 600 pips, they're making 27 grand in one trade. In fact, I've met people that have literally used 50 lots, which is like 50 million pounds, and they've probably made about literally like a year's salary, like 50 grand in one trade. But obviously they got millions in their account and stuff. You know, you need millions to even touch this. You'll get there eventually, but for now, that's just that's dreams there. But yeah, like let's look at this one more time. Let's look at 0.010. This is this is what I call sorry about that. This is what I call like a good sort of start. Look, so 60, yeah, you're making £50, $50, whatever. That's $53 pound. See, that's a lot of money there, you know, for just one trade. That's more than like a day's salary nearly, you know. So basically, yeah, I advise you to start off with maybe 0.5, 0.4, but every day, this is what I'm going to teach you now. This is the risk management now, yeah, the growth of your account. Alright, so this is just lots. We've done lots now, right? So now this is where the risk comes in. Okay, look. Alright, so let's look at this show. Let me just start a new pair. Alright, look at that drop. Okay. So this is the main thing in Forex. This is what not many new traders know. But this is what will keep you rich, will keep you never losing your account. Because with Forex, yeah, many traders lose their account. They literally go bust. Like, they get this thing called margin call. I don't know if you guys know it, but it's a thing like, for example, when you know, your balance is getting low. When it's only like, for example, you got £500. And then it's only on £100, or maybe 400 or 500. It would have to be on like £60 till you get like a margin call or something. And the margin call is where they'll just close your account because you went too low, and that's it. You're broke. You can't trade after that, or you have to deposit another 500 or whatever you want to do. But anyway, this is how bankers, pros, or whatever, they never lose. So for example, yeah, you know, like with my strategy, let's look at like today. Remember, I don't know if you was in it, but Euro USD, right? It dropped. I mean, it not even dropped. It went the opposite way. So I brought right here, but it's literally went all the way there. Let me get back to it. Actually, let me just give you an example of what risk really is and how you can never go broke with risk. Alright, look. Sorry about this. This is the trade. Okay, look. So I brought around here, innit? Literally right here on this blue level, yeah. Now look at this. With my strategy, I knew it was going to touch this level. Remember, I said it was going to touch this level to all my students and stuff like that. So yeah, I brought here. I took all the way here. My profit banked in here. Look at all of that, 170 pips in just one trade. And then stop loss just here. So for example, yeah, imagine this. You're going to have to, if you just took this trade, yeah, imagine you banked in this amount of money, okay? So that's it. You've made, let's say, £500 and 170 pips, and your stop loss was 400. Right, so yeah, imagine you just won this. It's gonna take, if you're gonna keep on doing the same thing where you're gonna put your stop loss around 400 pips and your take profit at the same like 1,000 pips, which is basically 3 times more of your stop loss. So look, you're risking a small amount and you're taking 3 times of what you're risking. See, look, small, 3 times bigger than the stop loss. So you see what I'm saying? So that's going to take at least 4 times to lose just that one trade that you made profit on. So for example, like here, I took all this profit, and my stop loss is always like this sort of small, and that's going to take me at least 3 trades now to just lose this one trade. So you see what I'm saying? You're always going to be on top if you've got a good strategy. And look at my strategy. Look how it just shot up. That's a lot of pips. It just went boom into the sky. So yeah, that's just an example. But also, I'm gonna still cover this one. Let me just give you this average true range. Remember this, the stop loss. How did I know my stop loss was gonna be here, and how did I know I'm gonna buy here? Because the price was there. That's 37 pips. If you look to the right, 37 pips. So I put my basically with the ATR, with stop loss, if it says 37, you want to double it. So it'll be like 70 something. So I put on like 700. See, look right here. And my take profit. Boom. My take profit, I knew because of my strategy. That doesn't matter with the ATR. All I look at the ATR is for my stop loss. But literally, I'm telling you now, add this all in your strategy. I swear to God, literally, profit will be coming your way every day. But this is just, I'm going to make more videos on this and more about the ATR and the stop loss and everything. Trust me, this is a powerful strategy. But anyway, I'll see you guys soon.